This stock is hugely undervalued right now and in a position to seriously take advantage of the current market dip. Welcome back to the channel. Today I want to be talking about Nano Dimension. As you know, I like to find stocks that are either undervalued or have catalysts that could push the stock price way up. First off, I want to say congratulations to anyone who listened about Petrotech back in September. I brought you Petrotech at 11 cents, which hit all-time high this week of 44 cents. So don't miss out on stocks like these, subscribe and turn on notifications so you will be alerted whenever I make a new video. NNDM is one of my favorite stocks and the valuation of this company is way off. In this video, I will be discussing exactly why it is off and where I feel management can make huge advantages in the current market. I will also discuss a few misconceptions about NNDM and the very latest news. So let's get into it. So if you are new to NNDM stock, check out my other videos where I explain all about the company. NNDM, Nano Dimension, is essentially an AME 3D printing company that produces multi-layer circuit boards, antennas, sensors, amongst other things. They provide nanotechnology based conductive dielectric inks, switch software to manage the design, file and printing process, and the company's main hardware product is the Dragonfly. Nano Dimension is substantially mispriced based on negative ARK sentiment. For anyone who doesn't follow Cathie or ARK Invest, basically ARK ETFs took a bashing throughout 2021 and so far into 2022, with some stocks being in these ETFs being down as much as 80%. Following Cathie Wood's investments made a lot of investors very wealthy up until 2021, a lot of money has been lost over the past 9 or 10 months. So this change in sentiment towards ARK has provided an opportunity, as this stock in particular presents a deep value play based on substantial mispricing. You are essentially buying $1 for less than $1 with an upside of around 40% even if we assume no growth. The CEO has also recently bought more shares, which may signal an opportunistic entry point, and I will talk a bit more about this in a moment. The current financials of the company, more specifically the cash on hand, the balance sheet and the current EV, all point to a case of substantial mispricing that the market seemed to have ignored, which may reward early investors in this narrative. So this is the latest financial statements of Nano Dimension. You will see here that they have over 1.5 billion in total assets and only 28 million in total liabilities, giving the company total equity of $1.495 billion. The market cap of NNDM stock dropped below 900 million today before finishing strong. So going back to what I said a moment ago, you are essentially buying $1 for less than $1 with an upside of around 40%. If you could buy all the shares of NNDM at the current price, you are effectively buying 1.495 billion at a price of only 900 million. And this is where the upside of 40% at a minimum rings true. In the case of companies like this, there has to be a reason for this to be priced so low, and usually in this scenario there is a huge cash burn. But that does not exist here. In the previous quarter, Nano Dimension posted a loss of 18.2 million. And while that might seem like a lot of money, Nano Dimension could afford to make losses like these every quarter for the next 20 years before they would ever burn through the shareholder equity. And if we look at what they are spending their money on, I feel even more optimistic about the future. The single largest expense is on research and development, not on excessive directors' salaries or something else that doesn't add value. Although we will have to wait until the annual report is released to see the exact breakdown of these expenses. So one of the reasons for this valuation mismatch is the fact that revenues is so low. Up until September, they had revenue of only 2.9 million, giving the company a terrible price to earnings ratio. But we should be valuing this type of company based on its future potential as opposed to its current earnings. Nano Dimension's Dragonfly printer prints circuit boards and electronic devices, and its Fabrica printer prints micro objects. Currently, a large percentage of Nano Dimension sales comes from its hardware printers. However, like all printers, once a customer has bought a printer, he will need to continuously buy the printer's ink, and that provides NNDM another recurring revenue source coming from its service contracts. The problem here is that to date, they have not sold many machines. But like with so many new technologies, it can take a few generations before a product really takes off. Think of Tesla. Go look at Tesla's sale figures for the first few years. It is only in the past couple of years that Tesla has really taken off and the share price has rocketed as a result. Nano Dimension only launched their 4th generation Dragonfly machine in November, and their first sales of the new machine came in December. And they sold another machine in January. Importantly, look at who's buying these machines. Leading defense forces and government agencies. These are exactly the types of customers that you would hope for any company to have. Now, I spoke about this in my last NNDM video, but CEO Yov Stern recently bought NNDM shares in the open market, citing his conviction and belief in the vision, strategy and future of the company, saying that recent events are encouraging. And not only that, Cathie Wood has also been increasing her position in the stock significantly. While ARK made some major sell-offs and reorganizations over the past 2 months, Cathie has continued to back up NNDM stock, buying another 1.35 million shares only last week on top of the several million bought over the past few months. Nano Dimension currently also trades at a price to book value of 0.66, which is akin to buying the company for 66 cents on the dollar, which presents a remarkable undervaluation, not on earnings but rather on net assets, which I have already said. Now, for those who say that Nano Dimension have diluted shareholders again and again, although this is true, they did raise the substantial cash on hand via share issuance at $15 a share. I always say it, if a company needs to raise cash, the best time to do this is when the share price is high. And I say this not only from a company point of view, but also from the long-term investor's point of view. For example, if a company needs to raise $100 million, if the share price is $100, then the company needs to dilute shareholders by 1 million shares. But in this example, if the company's share price was only $1, they would need to dilute shareholders by 100 million shares. Nano Dimension offered 39 million shares to raise $500 million back in February last year. If they were raising that money right now, they would have to dilute shareholders by nearly 150 million shares. That's nearly 4 times the level of dilution. So in fairness, they did what they did when they needed to do it, and they did it at the best possible time. And that cash has not been wasted. As we've already seen, that cash is still sitting there in the bank to be used to grow the business, make acquisitions, and secure the company's future, which I will look at in just a moment. At this point, if you are still watching, can I ask you to smash that like button if you find any value in this video? Help keep me alive on YouTube and help me grow this channel. Looking at TradingView, we can see that NNDM stock is now at the lowest point since November 2020. The last time the stock was this low was before all the dilution. Look at this, the last time the share price was this low, the company had assets of 63 million and liabilities of 10 million, giving NNDM total equity of just 63 million. Right now, total equity is nearly 1.5 billion. Looking closer, we can see the steep decline that the stock had taken in November into December, but this appears to not be dropping as steeply in recent weeks. This could indicate that we are approaching as low as this will go. That leads us on to news this week that Nano Dimension announced a collaboration with XTPL to develop new nanoparticle based conductive ink. So basically, XTPL's patent protected technology provides groundbreaking precision printing solutions for the global electronics market, targeted for the manufacturing of next generation microelectronics, flat panel displays and semiconductors. Together they will focus on the development of new nanoparticle conductive ink for AME applications, enabling high connectivity and high performance materials suitable for 3D electronic printing. And last week, NNDM announced the strategic acquisition of Global Inkjet Systems Limited, who are well known for inventing and delivering state-of-the-art 2D and 3D printing hardware and unique operating software. GIS has more than 130 customers around the world with a focus on high-value, precision-oriented applications. GIS is a growing company with revenue for the 12 months of approximately $10 million and a gross margin of 51%. Nano Dimension paid GIS 18 million in cash, and may pay more based on certain financial performance. Now this is very interesting for a number of reasons. First of all, GIS has a gross margin of over 5 million, so $18 million seems a very reasonable price to pay. If this deal is a huge success, then they will have to pay up to 10 million more, but even that is not a big amount if this is a huge success. Secondly, a lot of investors have questioned the CEO over the past year, berating the dilution and then not using the cash to do anything. So a question that I ask you is, would Nano Dimension have had to pay a far higher price for a company like GIS back just a few months ago? And thirdly, has CEO Yov Stern timed this perfectly? NNDM raised tons of capital when prices were at all-time highs, then sat on the cash during an inflated market and waited for prices to drop. In some cases up to 80% in less than 12 months for some companies. So are Nano Dimension now in a position to buy out competitors, to acquire companies at a huge discount, and to build up technology and patents at a far cheaper price, and do all of this without putting any debt or financial burden onto shareholders? As interest rates increase, there are a lot of highly leveraged companies that will get crushed over the coming years. The opportunity for NNDM is now there. Something that I speak a lot about in my videos is not liking to see goodwill making up a large part of a company's assets. Goodwill is where an acquisition is made above fair value. To put it simply, it is where a premium is paid to acquire a company. The opposite of this is negative goodwill, or as it is also known, a bargain purchase. I think in the current market, we could see a scenario where cash-rich companies like NNDM begin to make bargain purchases. NNDM is certainly in a position to be able to do this if the right opportunities arise. So guys, that brings us to the end of the video. If you've watched all the way through, please hit the like button, it really helps the channel out a lot. Drop a comment and let me know what you think is going to happen in the coming months, and make sure to pop over and check out my Patreon page where I am bringing the latest stock ideas that I believe will make big gains this year. At the current price, I think this provides a great opportunity to get into NNDM stock while it is still far below its net asset value and in a position to truly flex their financial strength over the coming years. If you're new, subscribe and turn on notifications, follow me on Twitter, and I'll catch you in the next one.